Okay, so I believe in the last class, what we have completed yesterday was e-way bill portal. We have gone through how do you need to file your e-way bills and everything, and we are done with the GSTR1 offline filing. So today, the topic for today's class will be, we are going to start with the ITC forms. So can anyone tell me what all kind of ITC forms are there which we need to file? Yes, I need some answers from you. I believe everyone had their nice cup of coffee or tea in the morning and people are awake. Okay, so I am getting an input that ITC forms are for refunds. No. Ganeshji, Arshadji, you both have said refunds. Even Sayali, you are telling me it is for refund. No, ITC forms are not meant for refunds. For refunds, we have RFD forms. Okay. Parthaji, you are coming out with ITC 04 and 02. Okay, so let's move on. So basically, there are four kind of ITC forms which we will be learning today. These are your ITC 01, 02, 03, and 04. So these ITC four forms we are going to learn today. Why there is a need to file them, who is required to file them, and how it has to be filed. So I would also like to share the PPTs. We'll go through the PPTs and see what is exactly the requirement. I'll be sharing all of them with you. It contains everything that what is a ITC form, who is required to file it, how to file it, all the screenshots, everything I've shared, and even we'll go through the online portal today. Just give me a minute. Okay. So basically, these are the four kind of ITC forms. First one is ITC 01. If you are a person who are getting registered under GST for the first time, or because of any reason you were not required to get under registered GST, but now there is a requirement. Can anyone help me with any scenario that you can let me know that, like, let's suppose today, as on 8th of August, I am not required to get registered under GST. But as on 9th August, I am liable to get registered under GST. What can be those reasons? Let's come out with those reasons that why I would be required to get registered. So the first input is threshold limits, turnover limit crossed, interstate sale. Okay, I agree. You are telling about threshold limit crossed. And Dhanashri, you are saying casual dealer. So for casual dealer, we have a casual dealer registration. ITC form basically is there. The major purpose of ITC form is that, let's suppose today as a person, I am not required to get registered under GST. But because of some reason, I have to get registered under GST tomorrow. Then what I'm going to do, today I'm having some stock with me. Let's suppose I am dealing into stationery items. I have a stock worth of rupees 2 lakhs lying with me on which the GST input credit is 50,000. Okay. But due to my turnover was below 20 lakhs, I was not liable to get registered under GST. Now, as on the date when I get liable to get registered under GST, that is today, my turnover is exceeding 20 lakhs, then I'll get myself registered tomorrow. But I have stock in my hand that is worth rupees 2 lakhs, having ITC of 50,000. am I eligible to claim that ITC? Because I'm going to sell that stock tomorrow. Then I will be registered under GST and I will be charging GST on my output liability. So when I'm required to do that, I would be eligible to claim the ITC, which is there included in the stock, which is lying with me as on the date I'm liable to get registered. Are you people able to get the point that why ITC 01 come into existence? Why I need the ITC claiming? Because if I have to discharge my output liability, then I should be also eligible to claim the ITC available with me. Okay. Nandini ji, you're talking about 40 lakhs limit. I believe we have already discussed when it is 20 lakhs, when it is 40 lakhs. We have discussed everything. Okay. So now for ITC 01, claiming of ITC lying in the stock, one reason you have already told me, threshold limit. There can also be one reason that I was in composition scheme. I was registered as a composition dealer. Now as on 9th August, I decided, or either my turnover crossing the threshold limit, I decided to take a normal registration. So when I have a normal registration, I'll be discharging my output liability along with GST. So when I am liable to pay GST, then I am eligible to claim ITC on the stock lying with me as on date. That is also one reason. Further, one more reason can be there, that let's suppose I am dealing into what kind of goods? Exempt goods or nil rated goods. I am dealing into such goods, and out of a sudden notification came, and notification makes them taxable as on date. Notification applicable, and from 9th of August, my output becomes taxable. For example, again, I'm taking the similar example for nil rated items. I am a dealer of magazines. I am dealing into the sale of magazines. Magazine is a nil rated item. But what are the inputs which are used in production of magazine? Like, if I talk about magazine, this is nil rated. Inputs, what are the inputs in this? Paper, it's a taxable item. Then we have editorial services. We are going to take editorial services. It is again a taxable item. Then we are using ink, printing press, right? All these things would be used for the production of magazines. All are GST taxable inputs. Okay. So when I am getting shifted, now on 9th August, a notification comes and it says that magazines will now be taxable at the rate 5%. Just a hypothetical example I am taking. Now it is saying on 9th of August, magazine will become taxable at the rate of 5%. So from 9th of August onwards, all my billing regarding the sale of magazine will be carrying what? GST at the rate 5%. I'm required to pay the GST on it. So what the law allows me, on 8th of August, whatever stock is lying with you, you can take the ITC of the stocks. I can take ITC of the stock lying with me in terms of raw material, in terms of semi-finished goods, in terms of finished goods. So either of the three, whatever ITC is lying, I am eligible to claim the ITC on the stock lying with me the day they become taxable. Are you able to get me what point I am trying to explain? That this is very important. If you are taxable, the government is giving you equal opportunity. That agreed. Now you are taxable, you have a liability now. So I am giving you whatever the ITC is lying with you, you can claim that. This is third, and the fourth and the last is voluntary registration. So in the first, we talked about the mandatory registration. My threshold limit is crossing. Now I have to get myself registered. But even if I, as a dealer, I just suddenly decide that, okay, now I have to get myself voluntarily registered under GST. So even on that day, if I have some stock lying with me, I can take ITC of the stocks lying with me. Okay. Reshma ji, you are asking that do composition dealers are allowed to avail input tax credit? This we have already covered in detail in the composition dealer class, and you are not allowed to take the ITC because your output liability is just 1% or 5% depending upon the type of goods you are dealing, and that has to be paid out of your own pocket. There is no ITC available to the composition dealers. Milind is asking for the cutoff dates for ITC credit. We are just going to deal with it. Let's go in the PPT. Everything has been mentioned over there. So we are dealing with the ITC 01. So this is your ITC 01 which we are required to file. So let's move. So what exactly it talks about? The cutoff dates. This is the information given that why you are required to take ITC through ITC 01. If you are getting yourself registered for the first time, the credit lying in your inputs, capital goods, in the finished goods, you will be eligible to take the ITC, but there is no ITC available in terms of services, because services kind of concept that does not lie in your stock. As on the cutoff date defined by the law, we can't say that this much services is lying in our stock. Okay, do remember these sections, very important. 18(1)(a), 18(1)(b), 18(1)(c) and 18(1)(d). 18(1)(a) deals with mandatory registration, B deals with voluntary registration, C deals with your composition dealer thing, and D deals with your exempt supply. See why this is important? Because when we will go on the GST portal, it is not going to talk about the theoretical part. It will just give you, do you want to fill ITC 01 because of these sections? Only the sections will be quoted over there. Okay. Second, very important thing, there is a time limit for filing ITC 01. If you fail to file your ITC 01 within that time limits, the ITC will not be available to you in any circumstances. So I have just defined 18(1)(a), 18(1)(b. You can go through that later on. So these are the cutoff list by when you can file for the ITC 01. So these are those A, 18(1)(a), 18(1)(b), 18(1)(c) and 18(1)(d). To be specific, how does it say? That when you are liable to get registered, what the law says, the day you cross the threshold limit, from that day, we are providing you with a time period of 30 days to apply for the registration. So you are provided with 30 days to apply for the registration. So what you have to follow, that your application for GST registration to be made within 30 days. The date you want to make the registration, if you have done that, then you can file your ITC 01. It can be filed only once. It's not possible that you are filing ITC 01 multiple times. Like once you have filed and then you come out with the thing that, oh, I have left with this ITC to be claimed. That cannot be done. It can be filed only once, and then the cutoff date is till which date you can take the ITC. Date immediately preceding the date when you become liable to pay tax. So for an example, on 15th July 2021, I become liable to pay taxes. So within 30 days, that is by 14th August, it is mandatory for me to apply for registration. And when I say apply for registration, it means that your application has to be submitted. You cannot just say that I have generated an ARN, as we have seen in the registration class, that I fulfilled the requirement of applying for registration. Application means your application is filed, submitted, and now it is with the department for the further processing. So if it is done within 30 days, then you are eligible to file ITC 01. You can do that, and it has to be filed. The cutoff date up to which you can take the ITC would be, wait a minute. Okay. So it has to be filed up to, the ITC you would be taking is up to 14th July 2021. Okay. So we will be taking ITC of all the stocks lying with me. I'll prepare a list of the semi-finished, finished, raw material goods lying with me as on 14 July 2021. There are two kind of things. Either I will be having things with invoices or without invoices. Accordingly, we will see when we are going on the ITC01 on the portal that how to file the details, and then you will be filing the details regarding those items and you will be taking the ITC. One important condition, if your ITC amount to be taken is exceeding rupees 2 lakhs, then a chartered accountant certificate or a cost accountant certificate is mandatory to certify that you are eligible to claim this amount of ITC. A certification is required mandatorily. Then there is a person who opts for voluntary registration. So by what date? Cutoff date is immediately preceding the grant of registration. So let's suppose on 15th July, I have applied for registration. My application is filed. And see, generally the grant of registration happens, let's suppose it's taking 7 days time. So I received my certificate on 22nd of July. So I'll be eligible to take ITC of what amount? Till what date? It would be 21st July. So the stock lying with me till 21st July, I can take that ITC. Okay. Pranavi is asking that the certification is required only for the first claim of rupees 2 lakhs. Pranavi, this claim can be filed only once. When we talk about 18 subsection 1 clause A, it can be filed only once. So if your claim is more than rupees 2 lakhs, then the CA certificate is required. You're filing only one claim. You cannot file multiple claims. Okay. See, when I opt out of composition, so opting out of composition, this can happen multiple times. Let's suppose for current year, I am going to be a composition dealer. Then next year, I just decided that I don't want to be in composition. I want to be a regular taxpayer. And then next year, suddenly again, my business came down. I decided that I have to be again into the composition scheme. So whenever you opt out from the composition scheme and become a normal taxable person, then you can go ahead and take the ITC claim. But there is a limit that it can be done once in a year, because this opting out can happen only during once in a year. Getting the logic? Why? Because opting out, you can opt out during the mid of the year. But again, going back into the composition scheme, that happens only before the beginning of the year. It starts from 1st of April and you have to opt it just before the starting of the year. Opting in cannot happen multiple times during the year. So when you opt out of the composition scheme but continue to be registered and pay tax as a regular person, cutoff date will be date immediately preceding the date when he opts to pay tax under normal mode. So again, the same date on 15th July, I decided that I will be now registered as a regular taxpayer. On the same date, I opt out. Then the stock lying with me till 14 July 21, on that stock, I am eligible to claim the ITC. Okay. Then the last one, the D, was when the exempt supply of goods and services becomes a taxable supply. So till what date you are eligible to claim the ITC? Date immediately preceding the date when the supply becomes a taxable supply. So let's suppose on 15th of July, again, my goods become taxable. So on 14th July, whatever items I have in terms of stock, I can claim their ITC. Can anyone help me in letting me know why it is mentioned once in a month in this year? Means I am eligible to do this multiple times during a year. How this can happen? Can I have some answers from the people? Okay, because of notifications, Ranjita, Subhashi. Okay, very correct. Because of notifications, because the government has the authority to issue multiple notifications, they can with a notification apply it, then with a notification they can remove it. So out of multiple notifications, if I'm becoming eligible for exempted supply or a taxable supply, depending on that, I can go ahead and file this ITC 01. Okay. Clear enough the cutoff dates? You have to be very careful when you are determining the cutoff dates to determine the ITC to be claimed. Okay. Now these are the important points that you should remember whenever you are filing the ITC 01. So these are: know what input tax credits can be claimed. So ITC in respect of services cannot be claimed in form ITC 01. So that's I have already told you that for 01, input of services is not eligible. ITC in respect of capital goods can only be claimed in case of composition dealer opt-outs of composition scheme or where exempted supply becomes taxable supply. So for section 18, subsection 1, clause C and D, you can get the ITC for the capital goods, but not for A and B. Voluntary registration, or when you are crossing your threshold limit, you cannot file for input of capital goods through ITC 01. Only clause C and D. If I'll mention specifically, clause C and D, it deals with that. You need to have invoice-wise details of ITC on purchases as on the date of the cutoff date. Invoice-wise, you need to have all the details. ITC 01 should be filed within 30 days of the date of registration or migration to a regular scheme. Now again, it cannot happen that it is saying me that once in a year I can do, once in a month I can do, but still there is a limit on that. Within 30 days, you are required to file the ITC 01. And there may be also scenarios like I see with many of my clients that they go for migrations. They become liable to file ITC 01 because of any of the reason, but they don't have any ITC to be claimed. So if there is no ITC, then there is no requirement to file ITC 01. Practical example when this has happened. Now, what can also happen? This is something I'm talking about, claiming of ITC through the ITC 01. The 4 scenarios have been explained. There is one more scenario that can happen. I am running a proprietorship. Okay. This Mr. ABC was running a proprietorship firm and he was trading into some items. Now, suddenly he passed away. As on 14th of July, if I'll say, the assessee passed away. Now, when the proprietor dies, he leaves legal heir behind him. So now his son, XYZ, is going to take over the business and he is going to run the proprietorship now in his own name. Now you need to understand, it was a proprietorship. Now the proprietorship is shifting from one person to another. So there will be a change in PAN. I'm going to continue the same business, but the PAN number will get changed. And when the PAN number will get changed, obviously my GST IN will be issued anew. So I am, as a son, as a legal heir, I am eligible to take the ITC of all the ITC that was pending with my father as on his date of his death to my new registration. Even in that case, I can go ahead with the filing of ITC 01 and I'll take the credits. Okay. So ITC 01, through that I will be taking the credits. My father has passed away. It's kind of takeover of an organization by the another organization as a going concern. When it is happening as a going concern, I am going to take that credit. Okay. So then you can claim ITC of which invoices, which are up to 1 year old in case of inputs and up to 5 year olds in case of capital goods. So this is again a cutoff. I cannot say I'm taking the ITC of capital goods which are beyond 10 years. If you can relate it, we have done in case of capital goods, how do you need to write off and how do you pay GST on resale of the capital goods? We have discussed. Over there was a limit of 5 years. So GST law considers that any capital good that you have purchased, the ITC on that will be consumed in 5 years. So that is why they have given me the limit of 5 years over here. And in the last, if the ITC claim is more than 2 lakhs, then you need to have a chartered accountant certificate or a cost accountant certificate. I'm repeating point 1 again for Nandini. So it says that ITC on services is not available through ITC 01. In second, ITC in respect of capital goods is available only under clause C and D, not for clause A and B. That is for composition and exempt supply. You can go ahead with the claiming of ITC on capital goods, but not when you are crossing the threshold limit or when you are going for voluntary registration. Okay. So let's log into the GST portal. You will have a better understanding that how it is done. It's simple. It's not that difficult. Let's just open it. Let me just get the user ID and password. So it says okay. So in the services, then there are returns, then there are ITC forms. Services, returns, ITC forms. All the ITC forms are available to you, which you can file. So ITC 01, we are going through the ITC 01 first. I'm filing for prepare online. I'll go for the prepare online. First question it is going to ask me, are you going ahead with 18 subsection 1, subsection A or 18(1)(D)? Why it is not giving me option for 18(1)(B) and C? Any answers? Why it is not giving me those options? Answer please. It's good to see when people are interacting with me. It gives me also the motivation. Okay. So Sushma ji is saying that not an exempted service. I'm not an exempted service, but still it is giving me an option of 18(1)(D). Okay, now people are coming out with answer C. Why the C clause is not given to me? Because I'm not registered as a composition dealer. If I would have been registered as a composition dealer, it would be giving me 18(1)(C, that now you are moving ahead to the new registration, to a normal registration, so you can claim it. 18(1)(D), why it is given? When we were going through the registration classes, I have told you that in the goods and services section, you need to declare only 5 top services. It's not mandatory on me that I need to declare everything. So the GST portal does not have an idea whether I'm dealing in exempt or nil rated goods or item or not. So that is why it is giving me that option that in case you are dealing with exempted or nil rated items, then you can go ahead and file your return under section 18(1)(D) and claim the ITC available to you. 18(1)(A) was dealing with the crossing of the threshold limit. My registration was taken because of the migration thing. The voluntary registration was taken. So that is why it is giving me an option that if your turnover has exceeded a specific limit, you can go ahead and file the ITC thing. So what I'm doing, I'm going with 18(1)(D). If I write that 18(1)(D), I have selected that, then it is showing me that if your claim under section 18(1)(C) or 18(1)(D) is made, you can take the ITC of inputs contained in semi-finished, finished, and capital goods on which ITC is claimed. This functionality says if you have more than 1500 invoices, it can be possible. I am claiming ITC on more than 1500 invoices, then I have to do it through the functionality. The offline mode I have to go. I have to download the offline utility of it, and then I will upload it and it will get uploaded in this. So I have to give the date on which the goods become taxable. So let's suppose I am talking about today, it's 8th of August. I am saying 1st August, the goods I am dealing become taxable. Then I need to mention the GST IN, inputting the data for which I have to claim the credits. So I have an invoice lying with me as on, let's take 1st July. So 1st July, okay, oh sorry, I need to mention a GST IN. Can anyone come with any GST IN? Just type it, I'll mention that GST IN over here. Anyone? Okay, so there is a GST IN 27 H3Z3. Have I done any mistake while typing it? Sorry, I mixed two GST. AANFN 0198 F1Z1. Okay. So when it was a valid, it has taken supplier name. I'm mentioning invoice number. Let's suppose 020. Invoice date 1st July का एक invoice था जो मेरे पास as party से आया हुआ था. Then I need to mention what were the goods. Are these inputs held in stock, or are these inputs contained in semi-finished or a capital good? I'm saying input held in stock. Description, just giving ABC, any stock. Then there is quantity. I'm saying it's in numbers. So where is the numbers? Okay, it's in numbers. Then I'm saying quantity, 100 pieces are lying with me. Value as adjusted by debit note, credit note. Now you need to see, let's suppose my invoice was of lakh rupees, which has been issued by NN Kulkarni and Company. Now later on, they issued a credit note on that. I might have bought 150 pieces on the original bill, and then I said that I want only 100, and because of any ABC reason, I refunded back 50 pieces to NN Kulkarni and Company. Now they will issue me a credit note. So I have a credit note for 50 pieces. So net items available with me are 100 units. So value that I'm going to mention here, my invoice carries value for 150 pieces, but over here I'll mention value as adjusted by the debit note and the credit note. So whatever the value is coming out for the 100 pieces, I'm going to mention that. Okay. So I'll mention that. Let's suppose it's lakh rupees. It's coming. Amount of integrated tax. Why it automatically gave me an integrated tax thing? Because it's an invoice number by 27 GST and code, and mine is 07. So I'm mentioning 18,000. Saying, so this is how I can keep on making the entries over here. So I'll say save. So it says it is still under pending invoices. Let's refresh it. Still under pending. Wait a minute. Let's see the preview. We don't have. We have to wait for a minute because it's still under process. Till the time it's not processed, it won't appear in my final certificate details. So okay. Let's wait for a minute, people. It's taking its own time. So I'm just showing you another thing if it happens. Okay. So if I am saying that if I have to make a claim under this 18(1)(a), it is saying that date of approval 18(1)(a) for me was 1st July 17. I got registered on 1st July 17. So it is saying that I cannot give you that option. Claim of ITC under section 18(1)(a) cannot be made as the registration application has been submitted after 30 days from the date liable to register. So that is why it is not giving me this option, though my registration was something that flowed from migration. I was migrated from service tax to GST. Since my registration is very old, it is not giving me an option to file it. Let's see, go ahead again and see whether it is now updating my data as per that or not. Still under process. I'll see. Let's see what comes out. Downloads. See, the problem is that, okay, the record has came. This is the GST declaration from claim of GST. It is coming 18(1)(d). Number of records 1. So it will show you the number of records you are going to input. 18,000, 1 lakh, and accordingly, and it is showing you the drafting. So Ganesh Subramanyam ji is asking that without GST number, can I claim? Please explain. So for ITC 01, GST-IN is mandatory. If I don't have a GST-IN number, how will I explain the government that this is an invoice flowing through a GST thing? I cannot confirm it. So if you have to claim GST, first thing, the samne wala banda, the supplier, will be registered under GST. And if he or she is registered under GST, their invoice must be carrying the GST number. There won't be an invoice showing GST component without the GST number. Okay, so let's go back to our PPT. So this is something again we have done online, exactly the same. All the screenshots is there. What you can do, how you can file. Everything is mentioned. The invoice value you need to mention, your ITC amounts you need to mention. So you need to go ahead, preview, submit. If your claim is more than INR 2 lakhs, then you have to upload a CA certificate as well. Okay, again the filing, same thing. You need to apply your DSC or your EVC code and you will be able to file it. Okay. So let's move to our next ITC form. That is your ITC 02. So ITC 02, why ITC 02 is required to be filed? Any idea? Get it opened. ITC 02. Now we have done with the conditions of ITC 01 when ITC 01 is required to be filed. ITC 02 happens in case of mergers and amalgamations. So whenever these are happening, obviously the firm which is getting merged into the new one, the older firm will get surrender its GST number. So whatever GST was lying to them at the date of merger, the new company is eligible to claim that GST. Alaguju is asking, do we have a separate tab for uploading CA certificate? Yes, it will happen. When your ITC amount will be more than 2 lakhs, you're fed, when you go ahead with proceeding, then you will get the tab for uploading of the CA certificate. See, I can't submit it. Once I submit it, it becomes on my portal and it will keep on showing me an error and I'll be receiving notices from the department that you have submitted something and then you are not uploading the CA certificate. So that is why I have not gone through the submit page. Okay. So this ITC 02, which talks about mergers and amalgamation. So let's see in the PPT. It's similar to what we have done in ITC 01. Exactly the same. The only difference is that the reason is different for carrying off ITC from the older firm to the new firm. So you can read that in case of transfer of business by way of sale of business, either through merger or demerger, a registered taxpayer can transfer the ITC available with him to the new firm. So it must be filed by the transferor and action must be taken by the transferee. So that is the only difference which happens when you file ITC 02 as compared to ITC 01. What is the difference? There is a transferor. Accept and reject things are going to happen. So transferor will transfer to the transferee. I am going to file ITC 02, and to which I'll say that I have, let's suppose, 1 lakh rupees of ITC and I'm going to transfer to you. So he or she will receive this request that, okay, this is available to me. Do I need to accept it or reject it? So you will get an option to accept or reject it. So accordingly, if you are doing this thing and this is a correct thing that is happening, you can accept it. And if it has come to you by mistake, then you can reject it. Once you accepted, all the ITC from the transferor credit ledger will get transferred to your credit ledgers, the ITC credit ledgers. So the prerequisites are that both the people should have GST numbers, the transferor and the transferee. Both need to be registered under GST. Without that, you cannot transfer it because transferee has to raise a request and transferee has to accept the request, and both can be done through the GST portal. Okay. Now there are few conditions which are mandatory for the transferor. What are those conditions? It says that transferor should not be liable for anything. He should not be a defaulter and he should not be liable for any of the tax liability which is required to be paid but he has not paid. See, what is input tax credit? Input tax credit is something which is available to me to pay off my liabilities. So if I have some liabilities existing, then how can I say that, okay, this ITC, I'll transfer it to my transferee? First, I need to pay off all my liabilities. There should be no liability, no interest, penalty, any defaulter thing I should not be there. Then I can transfer whatever the ITC was available to me to my transferee. So it very clearly says first they need to have a valid GSTI registration, GST registration we have for sure. Then the ITC, which I am saying that I have to transfer it to my transferee, it should be at least available in my credit ledger. Yesterday when we were discussing about the entries to be made in the books and on the electronic credit ledger and why they don't match, so you have to be sure that whatever ITC you are willing to transfer, that should be available on your electronic credit ledger as well. What is an electronic credit ledger? This we are going to do today. I'll show you how to take out your credit ledgers, cash ledgers from the system. So it should be available there. You should have filed all your applicable GST returns. There should be no default in terms of filing of the GST returns. Then all the pending transactions relating to the merger should be accepted, rejected, or modified. Also, all the liabilities related to the past returns should be paid off. The transfer of the business should be done with an accurate provision for transfer of liabilities on account of demand of tax, litigation, recovery, etc. And it should be certified by a chartered accountant or a cost accountant. See, when there is a merger happening, this A firm gets merged into a new firm called B. All my liabilities, all my assets, everything are getting transferred over there. So what the fourth point is saying that you have to make the provisions for all the liabilities as well. So this is something which is even followed under Income Tax Act, not a specific thing relating to GST. So you have to transfer everything in your portal, and the same has to be certified from a chartered accountant that it's a kind of takeover happening on a going concern basis. That everything has been taken, be it liabilities, be it assets, and everything has been merged into the new firm. Okay. Wait a minute. Let's go on the next slide. So again, the same. It's exactly the same. that how do you need to fill up the form. Return, again you will be going on prepare online button, ITC02. You over here are required to mention the things in terms of totals. What is the ITC amount is required to be transferred. Let's see it on the portal as well. We'll go for services, returns, ITC forms. So ITC02, there is a prepare online option only. Why offline has not been given? Because here I'm not uploading the data invoice wise. So it's a total thing that I'm mentioning, total ITC that I want to transfer. So what ITC it is showing me, which is already lying in my credit ledger. So in my credit ledger, this is the only ITC available to me. So it is showing, telling me that this is the ITC available. If you wanted to transfer this ITC, you can transfer it. Okay. So now Ketanji is asking me a question that what in cases where in transferee is not a registered dealer. So if he is not a registered dealer, see there you need to see in ITC02, it's a mandatory column for me to fill that I need to provide the GST-IN of the transferee. If I don't provide it, I cannot fill this form. So in case if the transferee is not registered and I have to, I'm getting into this merger. So if he is not registered, he won't be able to get the benefit of the ITC. So just because he needs to claim the ITC, transferee is liable to get registered. It's a very debatable question because it depends upon the facts of the case, the actual facts, whether the transferee's turnover will cross the threshold limit or not, whether the amount of ITC to be transferred to the transferee, is it substantial? If it is substantial, then they need to take it or not. It's the decision of the management. Okay. So you will mention the transferee GST and UN, then their legal name and trade name. And here you will mention that this is the amount of ITC that is available to me, which comes automatically, and this is the amount of ITC I want to transfer. Then there is a chartered accountant or cost accountant certificate which has to be given. His information is required here. This is mandatory over here. Like in ITC 01, it was mandatory only when your the amount of ITC transfer was above 2 lakhs. But here, irrespective of the amount, it is mandatory to file the CA certificate. You will file it, save it, and once you save it, it will give you an option you want to file it with DSC or EBC. Okay, so that's the thing in this your ITC 02. The same has been given here. Okay, then what happens is that I'm showing it to you on the PPT only. This I don't have on the portal. That once what has to be done after the filing of ITC 02. So once it is done, the transferee now will log in on his or her GST portal. Services, then in your user services, you will get this option ITC 02 pending for action. It is over here. You will get this thing that you have in ITC 02, which you need to accept or reject. So you will click over here and then see, this is how you will get a declaration on your portal that there is a declaration for transfer of ITC in case of sale or merger. This is the ARN number of the application and this is the GST-IN of the transferor. So it comes and says that the status is pending. Tell me what is required to be done. And then over here, amount of ITC matched, and there is a box in the below which says accept or reject. And accordingly, you will accept or reject and you will get the ITC to be transferred with you. And once you accept, the ITC is available to you. Okay. So this is your ITC 02. We are done with ITC 02. Let's move on to our ITC 03. Okay. So ITC 03, when it is required to be filed? ITC 03. Now ITC 03 comes into scenario for ITC 01 and 2 is the claiming of ITC, that we need to claim the ITC. ITC 03 is the reversal of ITC, very correctly given by Parthaji. It is for the reversal of ITC. If I have some ITC available with me, but now I'm not eligible owing to certain specific scenarios, I have to reverse it. Come out with the situations now as well that when I would be required to do reversal of ITC. Can I have the reasons from you? When I need to do the reversal of ITC. Yes, Rahul, you're telling me regular to composition. Yes, if I am a regular taxpayer and then I am getting registered under composition scheme. Yes, if I am doing surrender of GST IN, I will reverse all the ITCs available to me. I'm closing the business. There is thing that I'm seeing in the responses. Some people are talking about section 17.5, personal expenditure, club expenses, ineligible credit. For that, dear, we don't need to file ITC 03. So if there is reversal of ITC on account of section 17.5, it won't be done here. This we have discussed when we were doing what? GSTR 3B return. In GSTR 3B return, there is a specific column given to you which talks about the ITC which you are not claiming on account of section 17.5. So this is something happening every month. So that will be done while filing your GSTR 3B. For those section 17.5, I am not required to file ITC 03 every month. Pranavi, you are talking about loss or destruction of stock. This is again section 17.5 in 3B. No ITC 03. Ravi ji is talking about GST payment not done within the time limit to the vendor. So there is a section which talks about that you are required to make the payment to the vendor within 180 days. If not, then you are required to reverse your ITC. Again, for this 3B is going to be followed, not ITC 03. Okay. Alaguji, you are talking about that GSTR1 was not filed by the vendor and business is closed. I have taken the ITC, but I have to reverse it now. Even for that 3B, you cannot do it through ITC 03. And secondly, Alaguji, you need to consider now rule 36.4 is into existence. You have to do reconciliation with 2B. If my vendor has not filed the GSTR1, then it won't be flowing it to me and I'm not at all eligible to claim that ITC. So there would be no scenario of reversal happening. Okay, so when this is required to be filed, it is who will do the reversal of ITC for which ITC has been availed. It can be filed either by taxpayers who have opted for composition scheme or whose items become now exempted. Earlier we did that. Now I was in an exempted list and my items have become taxable. Now reversal will happen on the exactly 360-degree situation that I was in a taxable limit. I was selling goods which were taxable under GST, but now my goods and services have become exempt. So when my goods and services become exempt, there is no GST liability on me. And when there is no liability, so whatever purchases are there with me, the ITC that I have already claimed will now become my cost. I cannot claim the input tax credit on such goods. Okay. Just give me a okay. So now then there are payments are made on account of ITC. What all payments you are going to make in terms of stock, finished goods, and finished goods held in stock, and the capital goods. These are the three things which were available to us, which we can take the ITC through ITC 01, 18, 1 subsection C and D. And now the similar things are there for which you have to refund the ITC, the reversal. Okay. So now there is a valid question. Now Raviji is saying, is it not a loss to us that when we have paid the GST while purchase of goods and now we have to, we're not eligible to claim that ITC and we have to reverse it. No, Raviji, you need to understand the law concept. I think we have discussed it initially that what is GST? It's a tax on value addition. And the government is getting taxes on every value addition I'm making. Now my goods, let's take that example of magazine only, which was earlier taxable as a 0% thing, and it becomes taxable 5% on 1st of July. On 1st of July, now I'm discharging my liability. I'm paying the taxes on the value addition made by me at the rate of 5%. Now again on 1st August, government comes back with another notification that says, no, we are not going to make the magazines taxable. Now it will again be into the exempt category. Again, my rate becomes 0% from 5%. So there is no value addition being made. When there is no value addition, I'm not going to pay any taxes on the 10 rupee or 5 rupees value added by me. So the government says now the chain of GST has stopped. Now when the chain stops, so whatever was the previous level in the chain, even that ITC I'm not going to give. For me, the exempt supplier will become the final customer, because beyond that there is no GST involvement. So whatever ITC you have paid, you need to write it off. In the general term, when I say write it off, means it becomes your cost. It won't be there now in your portal. I won't give you the benefit the government is. In that sense, it's not a loss. It's a correct thing that is happening to make the chain running in the proper scenario. Okay, these three items, stock, semi-finished goods, finished goods, and the capital goods, on that you will be reversing your ITC. Then prerequisites is the same thing. First thing, you should have availed the ITC. If you have not availed the ITC, then there is nothing to reverse. Second is, for composition dealer, you must be registered in a composition scheme. Then only you will be able to file the ITC 03 for the, you must have opted for the composition scheme, and then only you will reverse it. So Satyanji is saying that we have to expenses out for the reversal of ITC. Yes, when I say reversal of ITC, it means the ITC which was earlier a part of my ITC ledger in my books, the ITC credit ledger, it was a part of my current assets, but now it will become my expenses. I cannot claim it. Okay. In this case, you will need a chartered accountant certificate if the invoice details are not available with the taxpayer. So if you have to do the reversal, and in case you are not maintaining, you don't have certain invoices, then you have to give a CA certificate. Agreed. Again, this form is available both online and offline, because again there can be more than 1500 invoices. So the online offline option is also made available to you. The same thing, you will log in on the GST portal, services tab, ITC forms. We will go for the ITC 03. Prepare online. Similarly, again, the sections will be available to you, 18.4A and 18.4B. 4A is for the composition scheme. You must have opted for the composition scheme before the starting of the financial year. And when you do it, so you will file your return for the reversal of the ITC. Okay. Then there is section 18.4B, which talks about the goods becoming exempt. Okay. So you would be then going ahead with the 18.4B. If you are into a taxable good and now the goods become exempt, then you will be filing the reversal of ITC. There would be no ITC liability on here. Accordingly, you will select 4A, 4B. Then over here, it has given you the options which was not available in ITC 01, but in ITC 03, they are giving you the option that you have invoices or without invoices. You will mention the goods detail with invoices over here and goods detail without invoices over here. You can see this on the portal as well. So if I'll go for ITC 03, prepare online, and I have selected the section B. I'm not taking A because I am not a composition dealer person. So that is why I'm going for 18.4B. So first it asked me that what is the date of exemption. So I was into taxable thing and now I am dealing with the exempted item. So I'm saying that 1st on August, my date of exemption is there, and I'm saying proceed. Okay. So now I have to file it. These are the 4 boxes available. Goods detail with invoices and goods detail without invoices. So when I go for with invoices, what it's saying, detail of stock of inputs held in stock, capital goods, finished goods, we have to tell. And then we have to also tell whether these items belong to the GST period or CST VAT. If I select registered under GST, I have to give the GSTIN of the supplier, his name, bill of entry or bill. If it is import, I need to give the bill of entry number, then invoice bill, इसकी date, और यहाँ पे आपने सारी अपनी goods की सारी information डाल दी and add. So this is how you will input the details for the items which have an invoice, but there may be certain items for which I don't have an invoice. And when you have such details, it is mandatory to furnish a CA certificate. So again, I'm saying it's under GST and I would mention the details. Similar details as was mentioned in the previous box. I'm going to mention it. I have this data in my books of accounts, but I don't maintain the hard copy invoices. That is the scenario. And back. Then it will determine on the data you have filled in this first and the second box, it will determine the amount of ITC payable by you. So now you are saying this is the item lying with you and you have to reverse the ITC on it. It might be a scenario you don't have ITC available in your credit ledger or a less amount of ITC is available with you. So then what you will do, whatever ITC is available, you will use the ITC to make the payments, and the balance, if any, you have to make the payment through cash. Okay. Can anyone tell me the logic that why a scenario will arise that I don't have an ITC to pay it off and I have to make the payment in cash? Why it is so happening? Yes, so let's suppose in April 2021, I had made a purchase of lakh rupees and there was 18,000 ITC on that. And when in July, I am saying that I am going onto the nil rated sales and I have stock out of this lying with me 50,000. 50,000 stock is still lying with me. Okay, so I need to reverse what? 9,000. But this 18,000 I have already utilized in the month of April to pay my tax liabilities. I don't have any ITC available with me. So this 9,000 I am required to pay in cash. Okay. The payment of taxes will be done. And once the payment of taxes is done, this will show the debit or credit entries in the cash and the credit ledger, which you have done, and you can file your return here. Okay. So this is how what we fill the ITC 03. So this is all the screenshots and everything. You can go through it once you receive the PDFs with you. So now we are moving to the fourth ITC 04, which is the different from these 3 ITC forms. That is your ITC 04. Why there isn't any idea? What is exactly ITC 04? Tell me. What is ITC 04 and when it is required to be filed? ITC 04 is more commonly filed if I compare it with the other ITC forms. If you are into manufacturing things or you are sending goods on job work to the people, then ITC 04 is required to be filed very regularly. It's a regular job like any other return, 3B or 1. Okay, so people are coming with the same answers, correct ones, that it is required to be filed whenever you are sending your goods on job work. So basically, ITC 04 will capture when you are sending your goods on job work, when the goods are coming back to you after the completion of the job work. It covers both the aspects. There are limitations when I talk about the job work when the goods are required to be back. Their time limitations have been defined by the law that within this time, it is expected that the goods will come back. So now first thing, job work. I believe you all know that what exactly is job work. Job work means processing of the raw materials. Let's suppose I have made anything and now I want certain additional work to be done on them and I don't have in source inside my organization to do that work. So I send my goods outside for completion of that particular activity on my item. So this is to complete a part or whole of the process which results in the manufacturer finishing off an article. Job work is a very general thing opted by the industry now. It helps to reduce their cost a lot. So now, if I am sending my goods to the job worker, am I eligible to take the ITC on my goods? Yes, you are eligible to take the ITC on the goods sent by you, because still for those particular items, you are the owner, the tax invoice is in your name, so you are eligible to take the ITC on those goods. It's just there is a difference in the timing, the effective date from which you can take the ITC. So there are two options. Either you will send the goods from your place, your manufacturing area to the job worker, or what you will do, you are making a purchase and you will directly send the goods from the vendor to your job worker. This helps to save your freight cost. So if you are sending the goods from your manufacturing area to the job worker, then it is the date when the goods move out of your factory. So that is the date on which the goods will be assumed that sent for the job work. And if you are sending directly from the vendor's place to the job worker, the date of receipt of the goods by the job worker is the effective date we assume for the goods sent. Okay. And when you have to receive it back, if I have given it to the job worker for performing the job work task on it, so if it is an input item, the raw material, the input item, it has to be received back within a period of 1 year. But if it is a capital item, then within what time it should be returned back to me? 3 years. If it is not returned back within a period of 1 year or 3 years, then what will happen? In case goods are not received within the period as mentioned above, such goods will be deemed to be supplied from the effective date. Now this is a gray area. If the items which I have sent 1 year back to my job worker, the input I'm talking about, let's suppose it happened in 1st July 2020, I have sent certain items to my job worker, but now the job worker has not returned me back up to 1st July 2021. Then I am required to pay taxes. Why? It will be assumed that the supply for job work is now a taxable supply, because it has not came back to me within a period of 1 year. So when it becomes a taxable supply, I am liable to discharge tax liability on those challans. Now when I am liable to pay taxes on those challans? From 1st July 2020, the effective date from which I count the goods have been sent to the job work, from that day I am liable to pay the taxes. So now when I'm paying the taxes after a period of 1 year, it will involve a huge interest on that. So those challans will be issued and you have to make the payment along with interest. So as a manufacturer or as a person who is sending the goods, you have to make sure that you get the goods returned back to you within the timelines as prescribed by the law. Okay. Now it is saying that principal directly sell from the worker's place. Is it available to you in case of job work? That let's suppose I am into a shoe industry and it was some embroidery required to be done on my shoes. I sent it to the job worker to do the embroidery on those shoes. So am I eligible to sell the shoes directly from the job worker? I don't want to bring them back to my factory, but I want, okay, from there only I'll sell it. This is not possible. This is possible only in the scenario that I have declared the job worker place as my additional place of business. Only then I can raise an invoice saying that I am moving my goods from there to the ultimate consumer. But if the job worker himself is registered, then I don't have this option. I have to bring back the goods back to me, and then only I can issue a invoice. So this is a summary what we have learned about the job worker thing. So Sushma ji is asking a question that in many cases molds and dyes lies with the job worker, then what is the applicability? Sushma ji, this is an exception in the job work thing. If you will read the entire job work clauses and the law in the GST, it says that in case of molds and dyes, there is an exception. In that period, there is no mandatory thing that they have to be returned back. Because this is a very general scenario. We send the molds and dyes to our job workers. Even the pattern makers things are given to them based on which they do our job work. They lie with them permanently. So the law that we have read in general is not applicable on molds and dyes. Okay. So Parthaji is saying, if the job work is done inside the premises of a taxpayer, do we need to file ITC 04? Parthaji, when the job work is done in my premises, so my goods are not moving from one place to another. And when the goods are not moving out of my factory gate, I'm not required to raise any delivery challan. So then there is no need to file ITC 04. So ITC 04 captures the following three details: goods dispatched, then received from a job worker back, and sent from one job worker to another. Even this detail is captured over here. And by when you are required to file your ITC 04, it has to be filed quarterly, first thing. Then it has to be filed by the 25th day following the quarter. But for the last 3 years, 4 years, I am seeing the government comes out with a lot of extensions for ITC 04. I think for the initial 2 years, it was even scrapped that you don't need to file it. And a lot of extensions were given that up to 31st March 20, you can file all the returns which were due from 1st July 2017. So such huge extensions were given in case of ITC 04. Okay. So basically, these are the details you need to So these are the details required to be furnished in your ITC 04. Inputs and capital goods, you will give the details, and the goods received back or sent from the business place of job worker. So this is the format of the ITC 04. We can see it on the portal as well. Let's go back on the portal. So I'll go for ITC 04, prepare online. For which financial year I'm talking about? I'm filling it for 2021-22, and I'm filling it for April to June. I've taken the recent quarter. So if it is more than 500 challans, then you have to again do it with the functionality, the offline forms which are available in the downloads. If you will see offline tools, it's available there. ITC 04 offline tool, you will go and download. See, none of the offline tools is difficult. We have already seen 2-3 offline tools. It's exactly the similar what you are filling online. Just give it in an Excel format, fill it up, create a JSON and upload it. That's the only thing that happens when you are doing the online thing. Okay. So then there is job worker type, whether your job worker is registered or unregistered. Let's suppose I'm filing it for registered. I will enter a GST number. Automatically the supplier name will come. Then you need to mention the challan number, the delivery challan number based on which your goods have moved from your place to a job worker. We are filling table 4, which talks about details of inputs, capital goods sent for job work. Okay. And even it includes directly sent to the place or premises of job worker. So when I enter this detail, then goods type, I have to define it is input or it is a capital good, its description, unit of measurement, all the similar things, and add. Very simple information that they are asking. If it is unregistered, it will just ask which state you have sent. That's the difference. If registered, the GST IN details. If unregistered, then the state and everything I'm mentioning. Then there is Challan number, Challan date, and similar information. What is the item? It obviously takes a bifurcation, input or capital goods from you, and you have to mention that thing. So this is the table which talks about sending of the goods to the job worker. Then there is table 5A, which talks about received back from job worker to whom the goods were sent. So let's suppose again I am taking the registered one. Read this thing very carefully, the information given. Either enter होना चाहिए यहाँ पे, enter the details of original challan issued by principal or fresh challan issued by job worker under which the goods have been received back are to be reported. So generally what happens when you send your goods on delivery challan to the job worker, you send your goods on your delivery challan. When the job worker return back your good, generally it is through the original delivery challan that you have issued, and he will raise his tax invoice for his job work charges. Okay. So you registered, you are mentioning the GST IN. Your original challan number and original challan date is mandatory here, because without that, the portal won't be able to judge the item which you have shown previously, whether it has been received back within a period of 1 year or not. Talking about inputs. So through this, the system makes sure that the goods are returned back to you within a period of 1 year or 5 years as the case may be. So you will mention here the challan number which is issued by the job worker, his challan number, his challan date issue, description of goods, unit of measurement, quantity, nature of job work done by the job worker, just you need to define it, that this is the nature of job work done by him. Then losses and waste, if there is any losses and wastes that had happened, you have to give me unit of measurement and the quantity. So let's suppose you have sent 100 pieces to a job worker to be worked upon, but while doing the job work, by mistake, 5 pieces were damaged. So now what are returning back to me? 95 units are returning back to me. So you will account for those 5 pieces here, the losses and the waste. And if the losses, let's suppose, like generally what happens is that I'm sending an item worth of 5 kilograms to my job worker, and whatever is coming back to me, the cutting and grading, whatever the job worker is doing, it is coming back to me by of 3 kgs. So now 2 kgs is a loss. So even you will here you will mention the losses that have incurred. Okay. So table 4 and 5A. Table 5B says that detail of input capital goods received back from job worker other than the job worker to whom such goods were originally sent for job work. So this is the original job worker, 5A received back, and 5B is received back from the second job worker or third job worker when we have sent the goods from one job worker to the another job worker. So similar informations. Job worker type, will mention it, and then your original challan number and this date, and his challan number, his challan date, description of goods, nature of work done, losses and waste. It's exactly the similar. It's just making the accounting of the items under the different tables. And the last one is detail of inputs and capital goods sent to job worker and subsequently supplied from premises of a job worker. So if there is any such items which you have directly supplied from the job worker's place, then you need to mention. So there is one difference, your challan number, challan date. Now you need to mention your invoice number in case you are supplying from the premises of the job worker. It is a sale that you are making. So you have to issue a tax invoice. So your tax invoice detail and date you have to mention, and again the same similar information as in any other information. So this is how they are closing your challan numbers which you have issued. Through Through ITC04, they make sure that the challans are closed within the specific time. Whatever the timelines have been specified, it gets closed. So in the PPT, it's the same thing. Everything that we have read, it's mentioned over here. All the online screenshots and everything has been given. You can check it up when you receive the PPTs. It's not working right now. So when you fill up all the 4 tables, you can go ahead and file the returns. Okay. So this is all about my ITC 04, ITC 01, 2 and 3. Alaguji is asking that do job worker needs to file any form? Alaguji, job worker is not required to file ITC forms. He is required to file his normal GSTR 3B and 1 because he is raising tax invoices to me for the job work that he has done. And if he is unregistered, then there is no requirement on him to file anything. What I have seen earlier when the GST law came, most of the job workers were unregistered by now, but now slowly and slowly, job workers are also getting under registrations. They are getting themselves registered under the GST thing. Okay, so let's wind it up here, the ITC forms and everything. Let's, after the break, start doing some small topics I'm going to pick up. And I'll even take you through the e-invoicing portal. See, on e-invoicing portal, I'll be giving you just a snapshot. We can't do a lot in the e-invoicing portal. We are all not registered under that, but I'll show you how it works. So currently the time is 9:24. Let's meet back at 9:38. Okay, thank you. Yes. So are we back? Back from the break? Okay. So now we are going to pick up some very small topics, but very important from the point of view doing the GST compliances. So very first thing, I'm picking up PMT 9. So what is PMT 9 exactly? So this is a new facility which is given by your GST portal. What used to happen earlier was that, just wait a minute, I'm just, yeah, okay. Has it ever happened with any one of you that you wanted to deposit tax under IGST, but by mistake you deposited the tax under cess, or interest has to be deposited, but then by mistake you deposited under what? Uh, any other GST tax laws. So this might have happened. और इससे पहले जब ये सब होता था, then you were not allowed to transfer the amount from one GST bracket to another GST bracket. Just let me know, has anybody faced this practical situation earlier? That by mistake taxes were deposited under the wrong head. Has this happened? And it was a great pain with you then. How to get the refunds for the clients, going to the department for refund filing is again a tedious process. And then it's a sheer loss of money to the client. The client also used to come back and say that it's a loss of working capital because obviously refund is going to take a time to be back. So what exactly is this PMT 9 going to help you is that it will allow you to make the amount move from one particular head to another particular head in just in few clicks. Okay. So if you will go through the portal, let's log into the portal and see through the portal. It's how do you get it? So the password is okay. So over there in the services, payments. So when you will go and click on payments, there is create Challan. Through this, you can create a Challan and do the payments. Then there are save Challans, whatever payments have been made by you. If there is any Challan that you have created but saved it for the client to be, for the client to make the payments, like me as a chartered accountant, my clients even want this services. Then when you are filing the GST returns, please determine what is the amount of taxes to be paid. Create a Challan for me, I'll make the payment. They don't even want to create the Challan, might be they incur an error while inputting the amount of taxes to be paid. So if I have created a Challan, I have not made the payment, then it will appear in Save Challans heading. Then there is this, where it went, Challan history. All the challans that you have paid in past, it will appear here. You can download any of the challan that you have already paid. Then there is application for deferred payment. So application for deferred payment, it happens. Let's suppose there is any kind of notice received by you from the department and you admit that, okay, the notice says that there is an additional liability of 50 lakhs. You have to pay on account of GST. Now 50 lakhs is a huge amount. You cannot make the payment at once. So you can make an application to the GST department that either provide me with an option to make the deferred payments. I'll make the payments later on, or this is installment thing that I want to make the payments in installments. 50 lakhs is an amount and I'll pay 5 lakhs every month. So you will get a installment schedule from the government. We'll come on this. Let's first see what is the first tab says, the payment tabs. Create Challan. First option, do you want to make the payment for quarterly return? If you are under the QRMP scheme, as we have already discussed, if you are under the QRMP scheme, then you can go ahead. It will ask you the question whether the payment is for a quarterly return. You will select the financial year, the period for which you want to make the payment. Then by default, it says 35% of the previous quarter you want to pay, or you want to make the payment on self-assessment basis. Depending on both, you can determine, like if it is third payment, third Challan, 35% Challan you have to pick. It will automatically calculate it. And if it is Challan on self-assessment basis, then you can go ahead and make the payment on self-assessment basis. Then it is asking me that your filing preference is monthly. I am a monthly return filer. I am not in the QRMP scheme. Then do you want to continue with reason as any other payment? Because I am not required to make the payment under the QRMP. It is saying that you have to make the payment under any other payment. So I'll show you what happens. So now when you go ahead with the making of payment online, so these are the multiple headings under which you make the payment, and these are the GSTs under which you have to make the payment. So if it is normal taxes, CGST, IGST, cess will come here, SGST will come here. Please do take care that CGST and IGST are together and SGST is separate. We many a times incur a mistake while inputting this data. Then if any interest, you are liable to pay an interest, you are filing your return late, or something was missed in the last return. Click by our own, calculate by our own self what is the GST liability to be paid and make the payment here. If there is any penalty which you are required to pay, like in case of your invalid e-way bill was being carried by your truck driver, or he was not carrying the e-way bill, any penalties imposed on you, you can mention here. And there is, if any late fees, it's mentioned there. Any other thing you have to pay here, and then total. So you feed the figures, then you click on the e-payment mode, or you want to make the payment through over the counter, through the bank, or you want to do NEFT or RTGS. So all the three options are given, and then you go ahead with proceeding and you can make the payments. So this is how you create the Challan. Then if I again go on the Challan, this payments, create Challan ho gaya, save Challan. If any Challan is saved, you can view it here. For me, there is no Challan saved, so there is no records coming. This is a Challan history. A Challan history, all the Challans that I have paid will appear here. Okay. Then there is application for deferred payment in installments. So if there any demand on me, so whenever there is a notice from the department and I agree to the demand, the letter will be issued to me, which will talk about the demand ID, based on which I'll be making the payments. So demand ID will be there. I will enter the demand ID and then the tax period for which I'm required to make the payment. So do I want to make a monthly payments, installments, or do I want to go for the deferred payment? If it is monthly installments, I'll tell the number of months for which I want the installments, then it will calculate and provide me that this is the installment you are required to make the payment, and I can make. And deferred payment is one when I'm saying that I don't want to make the payment today. Please provide me with a period of 3 months, 4 months, or 6 months, which is already approved by the department. I can file here for the deferred payment, and accordingly my demand will stop for the time being, and I'll make the payment once my deferred payment period is completed. Okay, you need to fill the reasons and your signature and everything. So now what I was talking was PMT9. So where it will appear? Ledgers, then electronic cash ledger. So when you will go in the electronic cash ledger, like as on current date, in my ledger, there is zero balance in my cash. I want to file a PMT9 for transfer of amount. So what I might have done by mistake, while creating the Challan, making the payments, I have by mistake added the amount of SGST and IGST. Earlier, what used to happen was that if I have done such kind of mistake, I have to file a refund application for the amount deposited under IGST head, and I have to sorry, I have to deposit a fresh amount in the SGST column. So it was a impact on my working capital. So now this is PMT9, through which it will give you what is the cash ledger balance available with you. It will mention everything. Now cash ledger balance, preview of updated balances. If I have to transfer the amounts, I have to select from where. I have to select from IGST, from which head I want to transfer from tax. There is no amount available. It is giving me 0. If I want to transfer it into SGST, and I can transfer the amounts. कि मुझे IGST के किस head से पैसे निकाल के SGST के किस head में डालने. That all information it will take. The major head, the subhead, the data, the amount which I have to take out from that, and I have to input into the new head. And as soon as you file this form, your amount is transferred. So it's a very welcome change from the GST department. Okay, PMT9 can be easily filled by you. Then in the cash ledger, then there is another thing, electronic cash ledger. This is something you should always maintain with you. I suggest all my clients and even my staff that make a habit to download the cash ledger every 3 months. The electronic ledger, credit ledger, every 3 months, you should have the record from the portal what is being shown there. This at a time will give you a data for 3 months only. So let's suppose I take the data from 1st March to till date and I say go. It will show me what were the transactions in my cash ledger and everything. And there is a button below which gives me to save it as an Excel, and I can save it. Even as a PDF or an Excel, I can save it. When you go for refunds, like SGST refunds are there or any other refund thing, they ask for your cash ledgers. So make it a habit to download every quarterly in your systems along with the dates that this particular cash ledger belongs to which date. So this is your cash ledger. Similarly, you have your credit ledgers, ITC ledgers. What is the credit ledger available? Again, this will show a data of 6 months. So if I'll take the data from this to this, so it will show you how the ITC is accruing every month to you, what was the credit, how much credit was there, and how much the debit, how much ITC you have utilized. See, me being a service industry, I have very less ITCs to be claimed, right? This also make a habit that you are downloading it every 3 months on your system. Very recently, I believe the rule came which said that the GST portal will be maintaining data only for 3 years. So just don't keep on sleeping thinking that we can download anything from the GST portal anytime we want. After 3 years, all your data will be deleted. So you need to have the PDFs or the downloaded copies available with you, because the notices can come from the department anytime. You need to have all those supportings from the portal available with you. So there is your cash ledger. This is your electronic credit ledger. And this is your electronic liability ledger. So it will show you that from which date to which date. Let's suppose I'm taking it from March and I'm taking it up to, sorry, not August, I'll take it to June. To date, acha, sorry. Have I mentioned something wrong? To date cannot be less than from date. I don't know, it's the correct one. It's acha, financial year 21-22. Sorry, I did this mistake. Okay, this is June. Go. So this will show me what was the liability that was there and how it has been paid. So this is your liability register. So all the 3 registers, the cash, credit, and the liability registers, you can get it through here, services. Then your ledgers, you can download it from here. Okay. Then there is another thing which is important, is that we have done ledgers, we have done PMT 09. Let's move on to this DRC 03. I believe you people must be having an idea what exactly is DRC 03. Any idea what is DRC 03? So Subhashi is asking me a question. What is the maximum number of past years for which department can issue notice? See, Subhashi, what the law says is that the notices can be issued up to 3 years in case of non-fraud from the date of filing of the annual return, and in case of fraud, up to 5 years from the date of filing of the return, annual return I'm talking. So if you will see for financial year 17-18, the annual return was filed, I think it was filed up to some January or February 2020. I remember the dates were so extended, the returns were filed so late. So if you will see that the department has a lot of time. And fraud and non-fraud cases, section 73 and section 74, which deals with it. So if the assessing officer has reason to believe it is a fraud case, then they have a period of 5 years, which is really huge for them to issue the notices. So now I have asked that what exactly DRC 03 is. I'm getting answer that it's voluntary payment, voluntary basis. It might be, there are multiple scenarios because of which you are required to make the payment under DRC 03. Very correctly, it's a voluntary payment. The cases may be a notice is issued to me from the department saying that a liability of 20 lakhs is on you. I say no, out of 20 lakhs, 2 lakhs is genuine, I'll pay it, but not the 18 lakhs. So I'll make the payment through DRC 03. There might be a scenario when I'm filing the annual return and I come to know that I have missed these 2 invoices for which I have not made the payment. But while doing the reconciliation, I found out that this is the difference as per the books and as per the returns that I have filed, and the period have elapsed, that is 6 months from the end of the financial year up to which I can do the adjustments through the GST R3B. So I don't have an option to make the payments through 3B. So what I'll do, I'll make the payments through DRC 03. So annual return is one thing. Then there might be certain things for which I don't have an access to the 3B or 1 to make the payments. The dates must have passed. I don't have any other option to make the payment. So DRC 03 is something that will help you. Also, there is a provision in the department. If a show cause notice is issued to you under section 73 or 74, and you admit your liability at that point only, then you can make the payment through DRC 03 rather than to have the entire orders things to come to you. So DRC 03, it appears in your user services. You went to this services, user services, and then my applications. So you have various areas where you can file your application. Select intimation of voluntary payment under DRC 03. I want to file an application over here. Click here, then a new application I have to make. Then there are options. Why do you want to make the payment? Voluntary. You on your own determine there is some liability which you haven't paid. Then if there is a show cause notice, for the show cause notice you want to make the payment. Annual return, you have filed any annual return on the basis of reconciliation, you have got that. Then reconciliation, just a normal reconciliation. Then liability mismatch, 1 or 3B may there is a mismatch, or ITC mismatch, or any other reason you are liable to file the DRC 03. So the last point which is mentioned, ITC mismatch, very recently, I think day before yesterday only, one of my client has got a notice from the department. The notice says that there is a ITC mismatch 2A 2B to GSTR 3B for the financial year 2021. Either define whether this mismatch is genuine or not. If not, you need to make the payments. So that working will go on. I've not worked on that notice, but This is exactly the same I have received for one of my clients. So let's suppose if I mention show cause notice, it will ask you give the show cause notice number and issue date. You have to give that. If I go ahead with annual return, it won't ask me any other thing. It will ask which section number you want to make the payment and for which financial year I can go ahead and make the payments. Overall tax period. Overall tax period means for which tax period you have made this calculation. So this might be for a financial year or a particular 6 months, 2 months, 3 months. You have to take that overall tax period information here. Then there is, you have to give tax wise, that whether it is interest, whether it is tax, whether it is CGST, whether it is IGST, you have to define it here. So you will define the, it's okay, I have not selected the tax period. So let's, okay. Okay, so I'm talking about annual return. I've given this financial year, so that is why it is talking about this. You need to give the correct financial year. So for financial year 2021, it would be April 2020 to March 2021. This is my overall tax period. Then details of payment. So I am making the payment. Let's suppose I have missed 2 bills during the month of June. So June 2020 to June 2020. I'll mention that. Which act? Let's suppose I've missed the payment of IGST. I'll select IGST. What was the place of supply? I need to mention. So when you are determining your additional tax liability, all these heads have to be determined at which particular payment you are going to make. So let's suppose I'm talking about Delhi only. Delhi mein maine supply kiya tha, so it's a local taxes which I have to pay. Then I'll mention the taxes. Let's suppose I have to pay 5,000 and interest comes out to be 1,000. And there is no penalty and no other things that I have to pay. And I'll say add more. Okay, this is something filled up. Then I'll say save. Then I'll go for proceed to pay. Okay, so this I need to delete. I have added one more row without adding any information. When I'll say proceed to pay, it will take to me directly to the payment area. This is somehow you need to make the payment. If I have certain credit ledger, it can utilize it from my credit ledger as well. And then it will ask me the reasons. So this is a box you need to mention that why you are making the payment. Or you can do one thing, you can draft a proper letter, address it to the GST officer after drafting it, and then you can attach that letter over here, that why you are making the payment. One more thing that I would like to tell you is that very important, where you file a DRC 03, what happens is that after filing, generally a box comes which talks about the ARN number. This is the ARN number of the document that you have filed. And you receive a mail also on your registered email ID regarding the ARN number. But I've seen in many cases while filing the DRC 03, I don't get that. So make sure whenever you are filing a DRC 03 and when on your main this page on your website, a box is displayed talking about the ARN number, please take a screenshot of that screen. Take a screenshot and keep it with you, because when you are going to submit that DRC 03 with the department, you have to submit an application which you will be attaching here, that this is why I'm making the payment. So it will be accompanied by your application, then your screenshot of the screen providing with the ARN number, the challan through which you have made the payment. So these all three things should be there in your DRC 03. Okay. If you people know in GST department where the multiple cases are there, and when I don't agree, there is a term called under protest. Are you using it for any of your client or any known? That we are even depositing GST under protest. That is, the department comes up and says, this is generally happening in big cases, like my department is saying that your liability is 2 crores, 3 crores. Under GST, if your liability, the fraud or default is above 2 CRs, there is imprisonment, bailable warrant is issued. And if your liability is above 5 CR, non-bailable warrant is there. So how you can save yourself is that if your demand is, let's suppose, 2 crore 20 lakhs, so you can deposit 30-40 lakhs in the portal through DRC 0 through and bring your demand below 2 CR. So if your demand is below 2 CR, no warrant will be issued against you. But you are not agreeing to that 30-40 lakhs, whatever you are depositing. So what you can do is that deposit that 40 lakhs through DRC 03, but deposit it under protest. So over reasons you can mention that I am depositing in under protest. The department is raising this demand on me, but I don't agree to it. But since the department is asking me to submit it, so I am depositing it as here as under. Write a proper letter and give it to the department. A very safer method to save yourself from the later on repercussions from the department. And this amount is refundable if when the assessments will go on, investigations will be there, and if you are able to prove that the demand was wrong and the department gets justified, the amount that you have deposited under protest, the department is liable to refund it back to you. Okay. So Nandini, it's DRC 03 only. She's asking that where is the option available in the portal. So you have to deposit under voluntary only, that I'm depositing voluntarily. There is no specific thing for pre-deposit. It's voluntary. Fill up all the information and in the reason box, you need to mention that this has been deposited under protest and make a letter as well. Okay, so this is your DRC 03. Okay. Then there is one more thing, TDS and TCS. See, this is not visible on my portal because I am not dealing into anything through which that is I am required to sell through the online thing. So this is something theoretical I'm going to tell. So what exactly happens is that if you are a supplier and you are making the sale of your goods through the e-commerce portal. So if you people are aware that if you are making the sales through e-commerce portal, the e-commerce portal is liable to deduct TDS. This is a TDS under GST law. They will deduct your TDS and TCS and they will deposit it under your GSTIN number. This is if you have an idea about income tax, how in income tax the TDS are treated. So my supplier will deduct, my customer will deduct my TDS. It will get appeared in my 26AS and I'll take the credit when I'm going to file my income tax return. Similar is the TDS under GST. My e-commerce operator will deduct my TDS and TCS while making the payments to me. This TDS and TCS will appear on my return filing portal, the return dashboard. And when it appears there, it is now my duty to accept or reject it. If I accept the TDS appearing over there, it will get transferred to my cash ledger. So once an amount is there in my cash ledger, I can utilize that amount to make the payments for that particular month. So let's go through the PPT. You will have a better idea about that. Okay. So it can be filed by all the taxpayers who are making specified sales on the e-commerce platforms or enter into any kind of works contract with the government departments. So in addition to your e-commerce portal, if you are working for the government department, like one of my client, he is rendering services to this North Block, South Block to the government department. So his TDS is even deducted by the government departments and they deposited for him against his GSTIN number. So this form is mostly similar to 2A as it auto-populates the details from GSTR returns like 7 and 8 together. If you will go on your return dashboard, see very simple on the return dashboard, you will open for any month. So where it appears GSTR1, GSTR3B, GSTR2A and 2B, where these boxes are shown over there only this option for TDS acceptance and receivable will also appear over there if your TDS has been deducted. So for me, there is no TDS deduction, it will not appear, but for the eligible people, it will appear. So it is provided for all the taxpayers from whom tax has been deducted or collected at source. Okay, so after deduction, your e-commerce operator are required, the deductors and the collectors are required to file 7 and 8. This is applicable to them by the 10th of the succeeding month. So far as a deductee is concerned, you need to accept and reject the TDS and the TCS credit on your GST portal. So once 7 or 8 is being filed by them, then you will file the acceptance or rejection. Thus, for availing this, deducted by the deductors and collectors, all the deductee need to file TDS and TCS credit received tab on the portal. Then there is due date. There is no such due date to give the acceptance and reduction. You can do it anytime. But I would prefer then when some amount is lying for you, you are eligible to take that credit. So why not to do that in that month only? Why to make a wastage of that amount? So every month, whenever you are going for your GST or 3B filing, check whether something is appearing in the TDS, TCS ledger or not. If it is appearing, then do file it. Okay. So there is a question from Nandini. She is saying the party who cut TDS and TCS, that party GSTIN, and when we file GSTR1 and that same GSTIN number, mandatory to take TDS, TCS credit. See, Sayali, what I'm getting from your query is that the party who is cutting my TDS and TCS, we are showing the same party on the GSTR1. See, e-commerce operators, Sayali, you need to consider what happens is that, let's take an example of Amazon. So we make the sales through Amazon. We are not making the sale to Amazon. The customers are different. It's that we are making the sale through Amazon. Amazon is a kind of aggregator. It gives me the marketplace. Similarly is Uber, Ola, right? So they are providing me the aggregator services. So they are, when I'm going to file my GSTR1, and I think we have even seen it when we were doing this offline return filing yesterday, it had an option stating when you are making the B2B sales or B2CS sales, it was asking whether you have made the sales through e-commerce operator or not. If through e-commerce operator, mention their GSTIN. So it is through the e-commerce operator, not directly to the e-commerce operator. If any further clarification required, you can mention it on the question box. This was something I was getting from your question. Okay. So this is the same, that by when we are required to file, so we will accordingly take the credits while filing the acceptance or rejection of the TDS and TCS returns. Then it's the screenshots of how to take those credits. So when on the returns, you will go on return dashboard. So over here, you will see this option, TDS and TCS credit received, prepare online. So the data is auto-populated. In the TDS and TCS column, all the data is auto-populated. You just need to accept or reject it. And if you think there is certain amendment required, like might be your TDS deducted was 600, but by mistake, while filing the return, the e-commerce operator has shown it 6,000. So even your even you have the authority that you can amend it. So you can go and amend it. Okay. So this is how it appears on the portal. TDS credit received. It will show the TDS credit received, and if you have accepted and rejected, the counts are here and the value will come here. And if you have done any amendments, the amendments will appear here. Okay, it's a summary that will appear here, that this is the total you have taken and this is the total you have revised. Just verify it, check it, and you need to file it return. And once you file the return, the amount will come to your cash ledgers. So this is your TDS and TCS claim that you need to do. Okay. So we have done this TDS, TCS, PMT9. We have done with ledgers, ITC forms in DRC03. Now there is this e-invoicing thing. I believe you people know to whom e-invoicing is applicable. So this is what I have taken in this PPT is that I'm telling you each and everything through the PPT, the theoretical thing, that how the e-invoicing got applied, how do you can apply it, to whom it is applicable. Getting an answer, it is applicable on more than 50 crores. Is it so? Yes, it is. What is the benefit of e-invoicing, if I'll ask you people? Why the government is bringing the e-invoicing thing into the scenario? Tell me. Okay, so what exactly the thing is? Yes, yes, very nice. Getting such good answers. So it is basically, Ravi ji has told that it is actual time basis of invoices. So e-invoices happen immediately when you are raising your invoice. You are liable to go on the e-invoice portal, and then you are liable to issue your e-invoice over there. See, what happens is that whenever there is a manual thing happening through GSTR1, we are uploading the data only after the end of the month. So though there is no real time basis capturing of the invoices being raised. Through e-invoicing, it's a real time basis capturing that is being done. Whenever you generate the invoice, it is on the portal. The government can see that, okay, this is something happening. And what earlier used to happen is that people used to raise the invoices, then they used to cancel the invoices. The sale has been made, the goods have been transferred, but the invoices got cancelled. The fraud entry I'm telling you about, this is how the frauds used to happen in the market. Everything happened, movement happened, but the invoices got cancelled. It was never ever shown on the GST portal that such kind of sales have taken place. So that is why, since e-invoicing has come into the scenario, it has become difficult for the GST registered persons to incur any kind of such changes in the bills being raised by them. So this is the theoretical thing, that through which notification the e-invoicing came, what you have to see to get yourself registered. You will see there, it has been made applicable from 1st October 2020 to all the businesses whose aggregate turnover was 500 crore and more for the preceding financial year from 17-18 to 19-20. So it was from 1st October 2020, and from 1st January 2021, it was made mandatory for business turnovers having more than 100 crores. And on 8 March 21, we have made it mandatory for the people who have turnover above 50 crores since 1st April 21. I believe sooner or later, everyone is going to get covered under e-invoicing. It's slow and steady, they are processing. Okay. E-invoicing is not applicable to the following categories of registered person now as notified. For these persons, the e-invoicing is not applicable. Sorry. So this is the e-invoicing portal. E-invoicing portal I have already I've taken you on the website. What exactly is the area? See, I can show you that what exactly. The website is near about similar to your e-way bill portal. Exactly the similar. You can have a registration. Then you need to log in. So I'm going to log in. I have one user ID and password, but there is nothing much that can be done inside. This is how the e-invoicing portal appears. How many invoices you have generated, how many invoices have been raised during the month, how many invoices have been cancelled, how many invoices have been total cancelled during the month. So you have all the similar facilities available as is available in case of the e-waybill portal. Over here, the e-invoicing is not generated over here. It is generated through bulk upload. You create a JSON file through your softwares and you get it uploaded over here. See, people, I'm very sorry, I can't open the entire things. I can just show you the little bit thing. This is how the e-invoice portal works. Bulk upload, here is the cancel option, print option, then MIS reports if you want to see the how many invoices were generated, how many were cancelled. User management, if the sub users have been created, obviously, okay, the sub users created, because generally in the organizations which are such huge, they don't keep one person to generate the e-invoicing. So we generally create sub user category over there. So this is how the e-waybill portal works. Going ahead, these are the screenshots that I have provided to you, that you can go and upload your things. The screenshots, whatever I've shown you here, it is also available in the terms of screenshots. This is how the bulk upload e-invoice JSON file you can upload. If you want the preparation of this link, that how to create the bulk generation tools, it is available under the help tools in the homepage of the e-invoicing portal. So if I'll, one second, I'll log out. So under help, tools, bulk generation tools, it's available. Depending upon what kind of sales you are going to make, you can download this bulk generation tool and you can work on it. So like this is e-invoicing. This is the tool. Just 1 minute, let me open it. So this is the tool. You create, again, that help format is there. FAQ sheet is also there. Item descriptions, form, profile, you need to mention your profile details. Wait a minute. Okay. So you will upload your details, and these are a few basic questions that you need to answer. Accordingly, your tool will start working. So do you have reverse charge services? You will mention, no, I don't have reverse charge services. Do you have e-commerce GST? No, I don't have. You have bill from and dispatch from transaction details, then you need to mention, yes, I have such details, and accordingly it will open that file. Do you have bill to ship to transaction details? And accordingly, these are the basic questions that you need to fill, and then you can go ahead and accordingly this page will become available. So when you feed the data on this, once it is feeded, you go ahead with the validation, and then you can generate your JSON file. So multiple B2B invoices can be generated through here. But I generally suggest to my clients that this is okay, easier way for a smaller organization who cannot go ahead with the updation of their ERPs. Now the ERP providers are also providing this updation, that directly through your system only the JSON files are getting generated. So whatever the JSON file get generated from there, I am suggesting them to directly upload it into the portal, so that no difference appears what is mentioned in your books and what is going on the portal. You go ahead. This is the tools. You can get it from there. These is the file screenshot. How do you require to work on the files? How do you generate, then cancel? That there are two types of, based on acknowledgement number or IRN number, whatever information you have, you can go ahead and cancel your invoices. See, cancellation of invoices can happen due to multiple reasons, like I have generated a e-invoice, but by mistake I have mentioned wrong GST or wrong information has been mentioned, then I have the right to cancel my invoice. If the goods are getting returned, then it won't be cancellation. Then I have to issue a credit note. This is the printing option. The invoice you want to print, you can print it. If you want to cancel bulk IRNs, you can cancel. How you upload JSON file, how to create a JSON file for uploading cancel invoice. So this is the bulk invoice Excel utility through which you can create the JSON file for cancellation of bulk invoices. So this is how your e-invoicing portal works. It's very similar to your e-bill portal. It's only the JSON utility which is there through which you can upload it. See, agreeing if an organization talking about 50 crores, the minimum limit above which you are liable to go ahead with the e-invoicing. Even if it is 50 crore, I assume monthly sales is around 4-5 crores. Minimum of 200, 300 invoices are happening. So you are required to take the help of the JSON utility to get it prepared. Okay. So this is something in the e-invoicing part. So I'm not going to fill up this. Coming back. So this is all that I wanted to cover today. I have covered few small topics, but very important for the purpose of removing around your GST portal. You need to know about it. So I have covered those topics: ITC force, payment, DRC, TDS, TCS, how to download your ledgers, e-invoicing thing. So I believe this is something for today. Next classes, I am going to pick up your GSTR 9 and 9C both. How to do the reconciliations. Filing 9 and 9C is quite tedious. It involves a lot of thought process that has to be done, a lot of grilling. Why the differences can arise. We have to do the reconciliation of 1 with 3B, with 2B, and then with your books. So 4-way reconciliations are there. So we'll be taking everything. Also, we will be covering refunds in the next week. So next week is going to be a heavy week for you, quite heavy topics to be covered. Refund and 9 and 9C for sure we are going to cover.